All right, well, we're back with you, and let's get you updated on this grain trade that has been kind of jumpy here this morning. Started in the overnight trade already. Let's go to our quotes provided by Bar Chart. Let's start with the corn. Here we go, and on the big board, we have the September contract, 7 1/4 higher. It's just hanging right in there where it opened. 494 1/2 is now our last trade. You have December corn 6 3/4 higher at 501 1/4. Hasn't really changed much in the last half hour. In the soybean trade, August, very strong, 28 higher at 1455 3/4. That's still within a nickel of its earlier high from last night. You have November, now 25 3/4 higher at 1343 1/2. Wow, just a penny and a quarter from its high. Well, let's go to check out the wheat complex here, and let's see what's going on with the wheat in Chicago. Let's go with September. We're down 5 1/4 cents right now. We have it at 654 1/2 now, and December is down, or excuse me, up 5 1/2 on December. September is up a nickel. If you look at the Kansas City market here, you have September up 8 cents at 826 1/4, and you have December up 8 1/4. Now on spring wheat trade, this would be in Minneapolis here today. Let's take a look. Wow, 14 3/4 cents higher. And now we're at 862 1/2. December is up 16 cents. So pretty strong action over in the spring wheat trade. Meanwhile, in the cotton, we'll go at December. It's down 96 points right now. We're at 80.21 per pound. So a little weakness in the cotton market. Interesting stuff going on, though. Soybeans really taking charge. We have Chris Swift with us here in studio. He is with Swift Trading in Nashville. Good morning.
Good morning.
Happy new week. It's a full trading week.
Yes, absolutely, finally.
So haven't had too many of these in the last month or so. But all right, so what's going on? How do you read the tea leaves on the grain market right now? Do we wait for better prices, or is this a real opportunity here?
Well, I'm not real sure about that, but something along the bean market. So we see the bean market probably benefited the greatest from the lower number of acres. We know that we're going to have some issues with South America coming up for their next crop year there. And although it's probably going to be a little bit bigger, we know that our bean oil demand has increased significantly due to the biodiesel and the increase in crushing facilities here in the United States and abroad. So if we think about just a fundamental situation, that's probably improved more in the bean market than any of the others that I can think of. Ethanol is still kind of mundane due to the gasoline, and even though the diesel fuel itself has just kind of started to perk up just a little bit last week, it's still going to be in real heavy demand going forward.
So we're getting to that time of year where, you get another week or two out, and I mean, most of the corn that's viable is going to be pollinated already.
It'll be made.
It's hard to rally it after that, isn't it?
It can be. I think there's so much discrepancy in the acres, the number of acres, that it's probably not going to be just straight back up or straight back down, either one. And if you think about an explosion, once an explosion happens, things tend to settle back down. And so we've had big move up, big move back down. More likely than not, as the crop matures going forward, we find some consolidation, and that's just doing nothing more than finding equilibrium for our supply and demand.
So let's take a look at the December corn chart here right now and see what it looks like. See that big spike there?
I do see that big spike.
How much of a rally was that from that valley before that to that peak?
I think it was a little over $1.20, if I'm not badly mistaken.
My goodness. And then look how fast it fell. And that was in about, if I remember right, like 2 weeks.
Sure,
right?
Absolutely.
So, I mean, is it possible that we could retrace that amount? I mean, technicians sometimes point to that as saying that might be a target. I don't know.
I mean, it's always possible. But again, if we think about it, we've already seen the big explosive moves. So now that we know that the crop is in the ground, it's growing, we're almost through pollination to it, the likelihood is trying to find that equilibrium. So instead of rushing back up again, where we might find somebody that really has to be in heavy demand for corn, or those that are not, and we see the farmer having to sell, neither one are very prominent right here at this moment. So I think, again, we tend to consolidate more than we do really directionally moving corn.
Let's take a look at a wheat chart then. Right. And on wheat, this is kind of a goofy looking thing too. It had that spike at the same time that corn did there. I don't know if that was as much a rally. Maybe it was. It looks like about $1. Well, a little over $1 there, but it came back just as well. But seasonally, how do you look at the wheat market right now?
Going dormant. And that's what we've seen really over the last 4 or 5 months. It's been a completely sideways trading range, and I don't think it's going to come out of that trading range anytime soon. The disturbances that we have in Crimea and the Russian issues, and here we had a big, terrible drought in the Midwest where our hard red winter wheat was damaged, but our soft red was not in bad shape at all around the rest of the world. So I think when we take all of those considerations in at one time, it's a pretty flat market right now. We got about a dollar trading range, and it's just flat.
If I know if I zoom in on a Kansas City wheat chart and look at maybe 2 or 3 months, it almost looks like it's making a bit of a wedge pattern,
right.
you know.
It's kind of consolidating.
And then it just depends on which way it breaks out, if that's the case. Yeah, you can kind of see it right there. All right, we'll come back in a moment and we'll talk about our livestock trade with help from Chris Swift right after this. All right, we're back with Chris Swift of Swift Trading right now. Let's take a look at our livestock trade, and let's go to the big board with our quotes provided by Bar Chart. So we have the August now trading 35 cents lower. We're at 176.65, and we now have October up a dime at 179.47. Well, that's kind of intriguing because when we opened things up, we were lower on the day. Now we're a dime higher. You have December up 7 at 183.25. So if you just took a snapshot of this and you just walked in and looked at the screen right now, you'd think, man, what a boring market. Yeah. But it's 70 cents off of its earlier lows from just a little bit ago. So it's starting to come back quite a bit. Feeder cattle market, it's narrowly mixed right now. You have August down 17 at 245.25. September down 12, but all the deferreds are just ever so slightly higher. Oh, anywhere from 2 to 4 ticks higher is about it from October on out. So it's kind of sleeping right now. On the lean hogs, we now have August up 17 cents at 95.32, but don't get too excited. The rest of the market is steady to about a nickel lower. Man, oh man, it is quiet in livestock. Chris, what's going on here?
Well, I think a couple of things. We got the big Western video sales start this week, and we'll see a large increase in volume of sales of stockers and feeder cattle over the next couple of weeks into the first week of August. So I think we're going to see a lot of cash activity and kind of get a real good idea of what cattle feeders are going to be paying for incoming inventory and what we're going to have to expect out of the fed cattle market in the fall of this year and early winter. And it's going to be some pretty high prices right now from what we can see on the board.
So I was trying to watch the updates on the cash cattle market last week, and sometimes there were several dollars lower, and then you get another update and it was a couple of dollars higher, and I didn't know what to make out of that. I just called it mixed. I don't know what to do with that.
I haven't seen an average yet of what they actually sold all the cattle for at the end of the week, but I don't think they sold a whole lot of volume either. They're not really picking up slaughter for anything, and what we did notice was picking up was dairy cow slaughter. So we've seen that elevate over the last 4 or 5 weeks. We know milk prices have been under pressure, and we know the dairies themselves have been under a great deal of financial pressure just because of the losses in fluid milk.
So, you know, I guess I haven't heard too much talk about that from the analyst point of view this year as far as the dairy herd makeup of the cattle offered for sale. So is that just starting, or do you see?
I think it is. It's probably 5 weeks, 6 weeks in the making, and I anticipated it 2 or 3 weeks ago when y'all ran an article. It was Milk Month here, and you ran an article and showed them dumping milk out in Colorado. That's a first signal. I've seen that before, and I have a tendency to know what happens after that is you start calling some more cattle because people don't want to see that. Their food poured out onto the ground. Nobody wants to see that, especially the farmer. He has worked hard for that product out there, and to see it wasted like that. So we need to do something, and as painful as it is to reduce anything, it's a must.
That's one of the most capital-intensive industries out there on the farm.
That and feeding cattle now.
Oh, my goodness.
Those two alone, there's some high-priced critters out there.
You are absolutely right. Well, thanks for coming in. Appreciate that.
Absolutely.
Chris Swift of Swift Trading in Nashville here in studio with us today. Christina, I'll turn it back to you.